September 9th, 2024. Today we had a big gap up, you can see from yesterday. Friday, we had a big gap up from Friday and 3 pushes up on the open, and then 3 pushes down, and then a bull channel. You can see the open, whenever you get a move on the open, you have to be wondering if it's a magnet. And we had an open gap yesterday with the 9 low and the 19 high. So this open gap here, we probably shouldn't, or sorry, the 10 low, we probably should not have collapsed below 10 the way we did. So the bulls who bought below 10 and were willing to scale in using a really wide stop, they were able to make money. Now, you're not going to take this trade unless you're an institution, but so it's not a good trade for an individual trader, but theoretically, below every bar, there are buyers and sellers. The only reason an institution would buy below bar, like bar 10 on Friday, would be if they had, $5 billion or something, and they're trading 1 or 2 Emini contracts willing to scale in. So maybe they buy an Emini here. It doesn't really matter if it goes 100 points against them. They don't really care. It's a very small amount of money relative to their account size. So they buy here, maybe they buy more here, they buy more here, they buy more maybe here, here. So maybe they're long 8 to 10 E-minis or whatever by the time that it gets back up there, and they can make a profit on the vast majority of their trades while breaking even on the first one. Bar 1, a bull bar, closing relatively near its high, but we have a big tail on the bottom and a tail on the top as well. So it's really not as strong as it could be. Still a 20% chance that on any given day that the first bar is the high or the low of the day. So you figure 20% chance that we've seen the low of the day at this point. Disappointing follow through on bar 2, a doji bar. So a lot of the bulls, if they bought for any reason above 1, they're disappointed in 2. And they're using 3 to sell out of their longs, and that's what's causing the bear bar. 2, the bears are hoping 1 is a bull trap, and that 2 is a low 1 short, and that we collapse below it. However, it's probably not going to happen. I think we're a lot more. I think we're going to be a lot more sideways here. So we're always in long from the gap and the bull bar on 1. However, it's really not all that strong on bar 2. Bar 3, a bear bar, but a tail on the bottom. So the bulls are hoping that the gap up and the bar 1 was the bull spike. Now we have a pullback 2, 3, and they're hoping to start a bull channel. Bears are still hoping that this is going to be a really disappointing follow through for the bulls, and that they're going to give up and we're going to get a collapse back down into yesterday's trading range. So back down into this area. However, that's a pretty long ways below. So the bears need to start doing something if that's going to happen. Really, what's important here is that nothing is all that great. So 3, a bear bar, but a big tail on the top, tail on the bottom. 4, the bulls see 4, and they're hoping higher low, double bottom. So 1 and 4, double bottom. It is a bull close, so some traders would argue possible swing up, possible low of the day. However, we have a doji bar on 2 and another doji bar on 4. To me, it just looks like we're forming a triangle. The bears see the triangle, and when you get a triangle, 50% chance the first breakout fails. So they're hoping the breakup to the upside on bar, whatever, 5, 6, whenever, is going to fail. Bar 5, a bull bar, but you can see disappointing, was not able to close above the bar 2 high. You can see the apex of the triangle was here, is going to become a magnet later today. Do I want to buy above bar 5? No. To me, the bar 5 looks like it's just not very good. We're so far above the moving average. We're like 30 points above the moving average. And if you're buying above bar 5, you want to be buying really above average bull price action. You're going to pay this far above the average price. And instead, if you're buying above bar 5, you're buying above, a bull bar with a massive tail on the top. So how good is this for the bulls? Probably not very. Bar 6, disappointment, I think. Still a tail on top of 5, tail on 6 as well. So we have a lot of tails. And the bulls are hoping that we're going to get a climactic upside breakout and start a new bull trend. Bears are hoping that they're going to be able to scale in and make money. So they're essentially betting that this is not going to turn into a strong bull trend. And I think the bears are probably right. Again, if we were going to go up, it's going to start to become pretty obvious pretty quickly, and the bulls are going to need to do a lot. To me, the big thing is bar 1 through bar 6. This looks like a bull leg in a trading range. And what comes after a bull leg in a trading range? A bear leg in a trading range. 7, an inside bar, or sorry, not quite an inside bar. We did trade above 6. The bears, it's a low 2 short. We had a low 1 on bar 2, a low 2 on bar 7. But I don't want to sell below this bar after 4 straight bull bars. There's going to be buyers below. It might be a micro wedge on a smaller time frame, 5, 6, 7, something like that. But again, I'm not willing to sell below a bull bar like that. outside up on 8. You can see we did get buyers below 7 during 8, and then we went outside up, but probably sellers not too far above 7. And why does 8 have a big tail if it's so bullish? Again, it's a low too short, but really not all that great for the bears, so it's not surprising they got stopped out. And then 9 is just a vacuum test, like I mentioned, of the bar 10 low. So really all this was the bears trying to sell to keep the gap open over here, and the bulls were buying, trying to force the bears to give up and get a vacuum test of that low. The reason that the bulls want the vacuum test is because it closes the gap, and when you close a bear gap, then this whole thing looks like then the whole thing is properly a trading range, right? Because gaps close in trading ranges. So the bulls were trying to close the gap with yesterday's bear trend, and the bears did not want the gap to close. However, they can't get a good sell signal bar, and we've gotten pretty much all bull bars so far today. So at some point, bears are going to give up, and we're just going to get a vacuum test of the magnet. That's exactly what happened on bar 9. Bears gave up, and we vacuumed up to the magnet, and then we sold back off. So it's pretty clear, on the close of 9, bulls were selling, and then 10 possibly micro double top of 9, but 9 is your sell signal bar. So on the close of 10, it's pretty clear that this was all just a vacuum test. And now you have to wonder, are we going to start to go lower? I think 10 is big enough to make the market almost always in short. I think the bears need one more bar to make the market always in short. However, 10 is big enough for a second leg down. And I would probably personally rather be short than be long. I would say we're not quite always in short yet, but the context is a little bit better for the bears here, considering how far we are above the average price. 11 consecutive bear bars, 10 and 11. However, we have a big tail on 10 and a big tail on 11. I think 11 does make the market always in short. The question is, how much lower are we going? Are we going to get a bounce and then some sort of double top and then a swing down? That's possible. Maybe we bounce. Maybe we get a slightly higher high. We have wedge 2, 9, and whatever, like 16, 17, somewhere over here. And then we sell off. That's possible. But if we're going to rally, the bulls are going to need to do a lot. So when you see this, I think we're always in short on the close of bar 11, and we're probably going lower. 12, a bear bar closing near its low. It's an inside bar and a low 1 short, so it's a credible sell. A lot of traders, after this many straight bull bars, 5 straight bull bars, they're looking for, 6 straight bull bars, bull closes. They're looking to sell a pullback, and they're hoping to. However, oftentimes what will happen is too many traders are trying to sell a pullback, and they'll sell us. Too many traders end up selling a small piece at the market to get short in case we don't get the pullback. And when too many traders do that, look what you end up getting. You end up getting the sell-off without any real pullback. So traders were hoping for a pullback and a lower high. However, 10 through 12 covered as much ground as 4 through 9 did in 3 bars. So these are pretty large bars, and they're pretty good for the bears. So an inside bar closing near its low for the bears, low 1 short. 13, a big bear bar. You can see the traders who buy below bar 1 and are willing to scale in are probably going to make money. And I don't know if they made 5 points. I don't think they did. Yeah. So they were able to make 4 points, but not quite 5. So 13, a big bear bar. It's a bear surprise. Obviously, 10 through 13 is its own bear surprise, and we're probably going at least a little bit lower. You can expect a second leg down. And then end up being a spike, a pullback, and then a wedge channel. So this was the third reversal up, first reversal up, second reversal up, third reversal up. And usually third reversals up are more reliable than first or second reversals up. 14, a doji bar. So traders, we have 5 straight bear closes here, and it's obviously stronger than this leg in the trading range. So this is good for the bears. We're probably going to get a couple more legs sideways to down. So 14, you can see we got buyers around the moving average. 15, a bear bar closing near its low, or not that near its low, but it is closing below the moving average. After 6 straight bear bars, the first reversal up is going to be minor. So not very smart to buy above 16, even for a scalp. It's really probably not worth it. We're still always in short. It's better to stay short. If 17 is another bull bar closing near its high, then you might look to get out. However, there's not really a reason to exit above 16 after this many consecutive bear bars. There was support at the moving average and probably some profit taking for the bears. You can see the bears who sold below bar 12 were able to make 10 points exactly on bar 16. So if they sold, they were hoping that we were going to get basically a collapse down into yesterday's trading range. And 14 and 15 aren't that indicative of a collapse. So they end up exiting, and that causes the bounce on 16, a bull bar closing near its high. However, the bulls can argue lower low double bottom 116, but no one wants to buy above a bull bar in what's clearly a bear trend. To me, 16 is just a pullback. So we have a spike pullback, and now you have to expect a channel. 17, a disappointing bar. So if you bought above 16 and you saw 17, you're probably not thrilled. If you bought above 16, you wanted to see the following bar look a lot more like 24 and just basically crash upwards. That would be your best chance at getting some sort of profitable trade here. And instead, you get that. So, really not all that great. And a lot of those bulls end up using the rally on 18 to exit their longs. And that causes 18 to be a big bear bar closing here as well. If you sell below 18, well, you can. We have two open gaps right here and right here. So if you sell below 18, you're taking a chance that it's a possible small pullback bear trend day. The problem with that is 16 is a pretty good looking reversal bar. It's not a good buy, but it's just a good looking reversal bar. So it might be a magnet later in the day. So you have to wonder, if we do go down, the downside might be limited. If you're selling below 18, your risk is large. So you sell small and you put a stop probably just above 18 is fine. It's a new lower high. So you can just sell, put a stop above 18 and take a chance that we collapse to the downside. However, 19 is disappointing. You can see bears, they sold, but they were more interested in selling a pullback, maybe around the bar 17 low. So they sold the 17 low instead when they were scaling in. And that's what caused bar 19 to end up having the big tail on the top as well. But still nothing to buy. It's a second reversal up above 18 or above 19. Yes, it's a high two for the bulls, but I don't really want to buy above a bar with that large of a tail. So it's really not worth it. 20, a big tail on the top and a big tail on the bottom as well. So it's another low one short for the bears, but it's really not good. The bulls who bought below 17 and scaled in are going to make money. They did make money. So the bulls who buy below 20 and scale in are probably also going to make money. 21 is a third push down. So we have, you could argue, well, the spike in the wedge channel and the wedge channel ends up being two of the three pushes, but you can look at, that the next reversal up is the third reversal up. So you can look at 21 as a third leg down and a possible trap. And again, the 15 low, the 19 low, and the 21 low, that's three pushes. So that's a wedge. So selling 21 is selling a third leg down in what's probably a trading range day. If you did sell below 21, you wanted 22 to collapse. So you wanted 22 to look like 18. And you were betting that you're going to get a breakout below with your two open gaps and a breakout and a measured move down to somewhere, down here, something like that. However, if that's going to happen, we're going to need good follow through, and instead you get disappointment 22. So 22 is not what you wanted to see if you sold below 21. If you sold below 21 and you see 22, you might just think, uh-oh, now I'm trapped in a third leg down in a trading range. I got to get out. And so those traders, as we sell off during 23, you can see we went back to one tick below 21 during 23. And traders bought back shorts, and that caused the bull bar closing near its high 23. Am I buying above 23? You definitely can. It's okay. I just think it's aggressive, and I'd rather wait for one more bar. But I think 23 flips the context back to always and long, so there's no problem with buying above 23. 24, consecutive bull bars closing near their highs. I think 24 is a much better buy than 23. You can see 24 traps traders in who sold the 22 high and were willing to scale in. They see 23, 24, and they might have to start exiting their shorts above the close of 24. And even the bears who sold above breakout points, like the bar 20 high during 24, they got trapped and they were never able to get out. So we had, these traders were trapped, these traders were trapped. So we had tons of trapped traders that helped cause this trend. So by the close 24, 23, 24, and you're looking for a swing up, maybe back to the bar 9 close, you know that the 18 bar range, when we fail to break out of the 18 bar range, so we try to get a breakout to the downside and a reversal back up. So this is a common pattern, and we might end up getting back up to the high of the day. 25, another bull bar closing near its high, or not quite near its high, but 3 straight bull bars, looking good for the bulls. It's kind of the same situation with bar 12 as we're getting right now, where a lot of traders want to buy, but they want to buy a pullback, so we might not end up getting one. But the close of 26 is a really strong bull bar, so I do think we're going higher. Or 25 is a really strong bull bar, so I do think we're going higher. 26, another bull bar closing near its high. So we have a spike 23 through 26, and at a certain point, traders are going to give up and start buying the market because they cannot get filled on a pullback. So this is where you kind of have to start to think about the trader's equation. If you bought up here, which is fine, your stop is all the way down here. So you're risking 27 points, basically betting we're going to get a measured move up to here, which was the exact measured move. So, very common pattern, bull spike, and then the channel ends up being the same height as the spike. And you get these 4 straight bull bars, 60% chance at least that you're going to get a measured move up. Sometimes it's a leg 1, pullback leg 2. Sometimes it's just directly of the bars. Either way, 27 doji bar. So I think 27 is disappointing for the bulls a little bit. However, it offers a unique opportunity if you're long. If you're long for any reason, or if you're not long yet. So actually, I'll just go through this first. So 27, it's a doji bar. The bears are hoping they're going to get a lower high from 10 through 22, but this is really strong. It's going to get a second leg. So even if we do pull back, we're going to go higher. However, you have to remember that the market cycle is spike, pullback, channel, trading range. So spike 23 through 26, pullback 27, and now 28, bull bar closing near its high. So 27 is the start of the channel to me because it's the first time we've pulled back in this spike. It's a doji bar and we didn't trade below another bar. So it's not technically a pullback, but I still consider it a pullback. And if this is a bull trend, you might be buying the top of the trading range, buying above 28. It's very possible. However, if this is a bull trend, we're not going to test back down to the bottom of the channel, the 27 low, for a little while. We're probably going to rally. So if you're looking to buy and you want to reduce your risk, you can buy above 28 and put a stop below the bottom of the bull channel, which would be the bar 27 low. So you can take the buy for a swing. And basically, if you get a bear bar closing near its low, you just get out. But we shouldn't get back to the bar 27 low unless unless this is not a bull trend. So you're taking a chance that we're not in a trading range. You are buying high in a trading range, but the context is special. So it's okay to take the buy, and there's no real reason to get out anywhere in here up until bar 45. You get out below the bear bar closing near its low, 45. You would have made a good profit if you had done that. So I think that's a good trade. 29 consecutive bull bars. Some bulls more interested in buying the pullback of 28 rather than directly above, trying to get a better deal, still stop below 27. You can see the bears who sold above 27, the doji bar, and scaled in, they also got trapped. So not all that great. Is this a bull trend day? I think we might get a bull trend. I don't think it's going to be a bull trend day because of how, the sell-off early in the day was a lot. So to me, I think we're probably going to go a little bit more sideways to up rather than straight up. 30, an inside bar, a bull bar closing near, or sorry, not an inside bar, a small bar, but a bull bar closing near its high. We have had bull bars from 23 to 30, and we haven't traded below a bar yet. So there's going to be buyers below 30. No one wants to sell below 30. So traders buy below 30, and you get a huge outside up bar. It's climactic, and it might be the end of the trend. However, it's also possible that it's just another surprise, and we're going to start channeling higher. So to me, what I see when I see 31, yes, climactic, but we did close above the bar 9 high, which is really important. This breakout point, we closed above it. So that increased the chances that we're going to get or continue up. So I think at this point, since we broke out to a new high and closed above bar 9, you can just put your stop below 31. So if you're long for any reason, stop below 31 and, just close your eyes and wait to hear a ding or a bear bar closing near its low. 32, a bear inside bar. It's the bears are hoping it's the low 2 short, low 1 below 30, low 2 below 33, or below 32, but it's really not all that great. Huge tail. 33, sellers above 32, and not really a very good short. Some bulls might exit below 33 if we trade below it, but are you really ever going to sell below 33? No, it's doji bar, so you really don't have to exit below 33. It's a minor reversal. And you can see a lot of bulls don't give the other bulls a chance to do that. They buy the close of 33, and that's what causes 34 to be a bull bar closing near its high. 34 also closes above the bar 31 high, so it's another breakout. Again, for the bulls, as we get deeper in trends, usually your stop should get tighter and tighter as you get, as your profit gets larger, your stop should get tighter is essentially what I'm saying. And so at this point, probably a stop below 32 makes sense. Stop below 33 is fine, but a little bit adventurous to put it there. So I would wait for 1 or 2 more bull bars before pulling my stop up into this area. But I think a stop below 32, the most recent pullback, because you have to keep in mind, this is a higher low on a different time frame, right? So if we look at like a 1-minute chart, you can see we got a higher low. So you're essentially, you're reducing your risk by using the lower time frame. Oops, that's not what I wanted. Okay. So 33, a bear bar, like I said, but a doji bar, and then 34, a bull bar closing near its high, closing above the 31 high. We're always in long. You can buy above 34. 35, it's a bull close. So I think it's really important that we got a bull bar 35, increase the chances that we go higher, even though it is just a bull doji bar. Any sort of bull bar here was pretty important. 36, a bull bar, but a big tail on the top. So again, we're still always in long, and there's no reason to exit, but you should start getting pretty aggressive with stop placement I think at this point, close at 36, a stop below 34 is fine. 37, another bull bar, so consecutive bull bars, 36, 37, but 37 better. You know there's going to be buyers below 37 since we have 4 straight bull bars. So your stop at this point, you can probably pull it, I don't know, 5 points below 37 or just below 34 makes sense. Sorry, 35 makes sense once we get to close at 37. An outside down bar on 38, but buyers below 37. So we're probably going at least a little bit higher. 39, a bull bar. This is a really tight channel, by the way. The move up from 23 to 39 at this point. This is obviously a really tight bull channel. So even if we do sell off, we're probably going to get a higher low from the move from 22 to 42. So 39, a bull bar, but it looks climactic. Again, at this point, your stop is below 38. It's another higher low. And then 40, a doji bar, 41, a doji bar. So 39, 40, 41, 3 straight doji bars. I think we're probably 41, 40, 41, 42, 3 straight doji bars and tails on the top. So it looks like a micro wedge to me. So probably okay to just get out at the market, or you can wait for a bear bar closing near its low. You can see some bulls bought below 42 since we had 4 straight bull bars, but they were doing so for a scalp and they exited at the high of 42 once they did it. So 43, buyers below 42, and then 44, bull bar, but that's where bulls are exiting. So if they bought below 42, which was a bit of a risky trade because of how many times we had reversed down so far. So it was probably getting more into the sell zone than anything. 45, a bear bar closing near its low. You can see we traded below 44. So 44 is your signal bar for 45. I think all bulls exit below 45. So you can sell it, but it's probably more of a scalp. If I sold below 45, I'd probably just exit on the close of 49. But I did not take that trade. And you have 2 to 1 of your true risk on the close of 49. It's reasonable for a swing trade. I think you just get out down there. 46, disappointing follow through, but it's not that surprising considering how many straight bull closes we got and how many how tight this bull channel up is. So it's really not that surprising that we get a bull bar on 46. 47, a bear bar closing reasonably near its low. So it's okay for the bears to be selling, but really not all that great. It could be a second leg down. 48, a bull bar, but a big tail on the top, probably sellers somewhere up here. And then a giant bear bar closing relatively near its low, 49. So you can see a breakout below the channel, 49, and then at the moving average. Probably buyers around the moving average for at least a bounce. But I think if I'm a bear, like I said, you sold below 45, your goal was probably to get to the moving average. So I don't really think it's worth shorting down here. And then 50, a bull bar closing reasonably near its high, possible wedge. But if you're buying with 50, big bar, big risk, and a tail on the top, I'm not really doing that. And then we get a huge surprise, 51. When we got 50, I kind of thought the day was going to be pretty sideways for probably most of the rest of the day. I thought we might drift down a little bit and then try to get a reversal back up. But 51 is a big outside down bar, a huge bear surprise. The problem with selling below 51 is your risk is big. However, to me, 51 makes me think we're in a trading range. So if we are in a trading range, look at all these open gaps, right? All these open gaps might have to close if we are in a trading range. So you got to start thinking about that. But it's not really worth selling below 51 because you're risking so much. So some traders, they sell a 50% pullback during 52, which is about where we got to. 53, an inside bar, a low one short for the bears. So now you can sell below 53, stop above 52, basically betting that we're going to go collapse down towards the magnets and you're going to get a second leg down from 51. If we trade above 52, then the collapse isn't going to happen. So it's really not worth being in the trade if we go back above 52. 54, another bear bar. So consecutive bear bars, 53, 54. 54 not able to close on or near its low, but it does close below the bar 52 low, which is really important. I think that's the breakout point. So this whole thing was a wedge. You could say 1, pullback, 2, pullback, 3, wedge, and then breakout below. Bears want measured move down to here, selling below 53. You're risking 4 points trying to make it, 8 or 9 points, 4.5 points trying to make 8 or 9 points with, I don't know, probably pretty 50-50 chance we get there. So I think that's a credible sell. 54 consecutive bear bars, but not able to close near its low. Like I said, 55, 3 straight bear bars. Where are we going to now? Well, the open gaps are obviously a target in the open of the day. The bar 1 open is obviously a target as well. So I think we're going at least a little bit lower, but I'm not sure that that we're gonna collapse all the way down to the bar 22 high, right? The bar 22 high is a magnet because the traders who sold above there and scaled in should be able to make money, but again, it's not really all that great. 56, a doji bar, meaning that the sell to close is probably coming to an end pretty soon. And then 57, we have 5 straight pair closes, so probably going at least a little bit lower. You should expect the second leg sideways to down. I had to pause for a minute there, but I believe I was on bar 57, so 5 straight pair bars. We're going lower, but I think the open of the day is probably the target, so I'm not sure how much lower. An outside up bar 58, I think is mostly just bears taking profits. Bears selling, able to make 10, 11 points. Not quite 15, I don't think, yeah. But more, 10-ish points. So that's probably, the cause of a lot of this profit taking on 58. However, after 5 straight bear bars, you know that the first reversal up is going to be minor. 59, an inside bar. The bulls are hoping it's an IOI in that breakout mode pattern. So it's a theoretical buy above 59. And they want a swing up. However, it's really not that good. We're still always in short. There's going to be sellers above 59. And then outside down 60, not that surprising. For the bears, if you're short, you can probably just pull your stop to above 60, or you can sell below 60 and put a stop above 60, taking a chance that we either collapse down to the 22 low or get a couple more legs sideways to down. 61 is disappointing. It's, there were buyers below 60 initially, but no real reason to exit above 61. You can see 60 is a big bar, so the risk is big. So traders more interested in selling a 50% pullback of the bar rather than directly below it, as we can see here on bar 61. 62, a huge bear bar, so a collapse basically below the wedge channel. 55, 58, and 61. We get a collapse below on 62. The bears are hoping that this is the start of the big bear trend, or at least a vacuum test of somewhere down here. But you can see on 63, the bears basically just saw it and they all bought back their shorts. I assume it was around 20 points for the bears who sold. Yes, look at that. This is a 20-point profit for the bears who sold below bar 53. Not surprising that they ended up taking profits down there. So 63, bears buying back shorts and a bull bar, but a big tail on the top. 64, disappointing. I think probably buyers below, but probably could be far below. You have to have a pretty wide stop if you're going to be buying here. We're going to get a second leg up from 63 and 64, but 62 was a pretty strong bar as well, so you have to keep that in mind. An outside bar, 65, but a tail on the top, tail on the bottom, probably buyers below. And 66, another doji bar. Bear bar closing near its low, 67, but again, this is not the sell zone. If we were going to collapse, we would have already done it, 63, 64. And then we basically just went sideways for most of the rest of the day. You're not going to buy above 71. It's a triangle. You're at the apex of the triangle. So we're going to get a breakout pretty 50-50, but I don't think it's all that smart to be buying above 71. You could buy the close of 72, but it's late in the day. So the traders who are doing it probably were scalping for 5 points. Not quite able to get it. I think 21 tick trap. Yeah, so 21 tick trap. So the bulls who bought above 72 were not able to make 5 points by 1 tick. So probably buyers below 75, but again, you don't want to buy this trade this late in the day. For trades today, I thought you could sell below 12 or 18. 18 is not as good as 12, but reasonable. And then you could buy above 23 for a swing. I thought better to wait for 24, buy the close 25, buy above 26, you can buy above 28, 29, 30, buy above or below 30. Below 30 was the best limit order trade on the day, I personally think. 34, you could buy above, buy the close 35, 36. I would not buy anywhere much higher than that, and I would get out below 45. You could sell 45 for 2 legs sideways to down. Maybe you add below, or you sell more below 53. But again, if I had sold below 45, I would just exit on the close of 49 and look for the next trade. I think 53 makes sense after the bear surprise 51, taking a chance that we started some sort of bear move down. Could sell the close 54, maybe you could sell below 60, not as good, but reasonable. 60 better if it closed below 58. And then maybe 72 that late in the day, but I don't know. That's really not all that great. So I thought the really good limit order trades in the day. You could sell above 57. You could buy below 30. You could buy below 37. Those are like the 3 that just really stand out to me on the daily chart. So I'm going to use the extended hours. So you can see it's an bull inside bar closing near its high. This is what the bulls wanted, a good looking bull inside bar closing near its high. What they're hoping to get is that this ended up being a bear trap. So 1, and then they're thinking this was the pullback and a climactic second leg down on the 9-6 bar, and now we're going to start to rally, maybe back up to the 830 low or something like that. It's possible that we do that, get up here, and then start to go sideways, because this whole thing might be forming a big triangle. So you do have to keep that in mind. I don't know if this is the bottom of the triangle. We could go lower, right? Because if we go lower, even if we go down here, you're still going to be able to draw a triangle. So I don't know if this is the low of the triangle, but I do think the daily chart is starting to form a triangle, and we're in breakout mode, right? This whole thing is breakout mode. We've been really in breakout mode and in a trading range since, over here. I think especially since here, we've just been in a trading range. So I'm expecting the daily chart to stay in a trading range. The weekly chart, the bulls are hoping that we get a bull bar closing near its high and trying to completely undo the damage of last week, but that's going to be really difficult to do. So I think if we do go up here, this will end up being a minor reversal, 1, pullback, 2, and we'll just continue sideways up here. And the monthly chart, I would not be surprised if we triggered above the August high during the September bar. But I'm not that convinced it's going to be a big bear bar closing near its low. We're pretty early in the month though, so we will see. You can see it's already the same size as this bar, so pretty volatile month. But all right, that's going to be it for the video.